Okay, I think we are live. So okay, we are live. So we are going to start this 8:03 p.m. West African time. Okay guys, good evening. I can see 1, 2, 3 joining. So if you can hear me loud and clear, kindly comment loud and clear, so I know that my sound is good and clear. So comment loud and clear if you can hear me loud and clear. Okay, loud and clear. I can see T Mayaki's loud and clear. Alright, who else can hear me loud and clear? So we start. It's already 6 minutes past 8. Okay, Ben, loud and clear. So that is good. You guys can hear me loud and clear. Today's session, we are not going to take time. It's going to be very, very swift. And I want us to wrap everything up in less than 20 or 30 minutes. Okay, so today we'll be discussing on risk management, how you can leverage on risk management and make more money from the market. I don't know why I'm smiling here. Okay, so if you are here and you are available and you are ready to pay attention to me, I want to see you comment. Pay attention on the, just comment pay attention, then we move. Comments, pay attention, then we move. Could you please help me passing? I don't understand what I'm writing there, Hazan. Comments, pay attention, so we proceed. Okay, as you can see, pay attention from Ben. Who else is following? Comment, pay attention. Then we move. So today let's discuss about Gilbert. Let's discuss about risk management. Now, why apart from the fact that so many of you suggested last month we should discuss about risk management, why I also intended to discuss risk management is about the dip we are having right now in the crypto market. So majority of people are losing funds and they are crying, and it's not their fault though. I don't want to say it's their fault. Maybe it's the lack of proper education, trading education, because if they have a proper trading education, they would have applied proper risk management in all their trading. So I believe you all understand what what is risk and what is management. But in clear terms, in simple definition, I would just say risk management is simply capital preservation. So it's preserving your capital, that is risk management for me. And this applies in anything you do, apart from just Forex, crypto, binary, stocks trading. You need to apply risk management in everything you do. Even if you're a farmer, you apply risk management. So risk management is capital preservation. You know, trading is very, very risky. It's high risk. It's one of the, how should I put it? It's one of the riskiest business in the world. So if you make any small mistake, you lose your money. So I will always advise that as far as you are trading, if you can't make $1 or if you can't make ₦1, don't lose your money. Always try your best to preserve your capital. So I start by first talking about, I'll talk about 5 things here. First is position sizing. I want to talk about position sizing. I see a lot of beginners traders do this. They just come into the market without proper education, and maybe they fund their account with $100 or $200. They take a trade and they don't calculate their lot size. They don't calculate their lot size. They just jump in on the trade and open 0.01, 0.02 without calculating the lot size. The truth is, for you to preserve your capital, you need to calculate every move in the market. Every move you are taking, you need to calculate it. So for example, let's say you want to trade Euro USD, so you open the charts, you have done your analysis, you say okay, price is bullish, you want to buy. Before you take that buy position, you need to figure out how much you want to risk on a particular trade. So let's say for example, you say you want to risk 3% on a particular trade. There is a formula you use to calculating that. I have a video on how you can actually do that on our YouTube channel. Maybe after this webinar, I can just paste it for you. You rush and check it out. But I don't bore myself with the calculation. What I do is that there are 2 tools I use. I use my FX book or the Steno app. So all you need to do, if you are using my FX book app, just go to calculators, then do risks or equity calculator. Input your trading account balance, input your stop loss in pips, then you have the lot size to use for your trade. I see a lot of traders advise newbies, if you are using a $100 account, use 0.01. If you are using a $200 account, use 0.02. Stop loss are different. Stop loss in pips are different. So I don't recommend that. So position sizing risks only 1% or 2% of your equity. What I mean by equity is trading capital. So if you are trading with with $1,000, 1% of your $1,000 is $10. So you know that at this particular trade, you are not risking more than $10. So if everything goes bad, you are losing just $10. You still have $990 left for you to trade with. Don't forget, trading is speculative. So trades may not always go in your favor all the time. You will have losing trades. So that is why you need to manage your risk properly. So that is for position sizing. Use 1% or 2% of your equity. Don't move forward to 3% or 4% or 5%, except you are scalping or you are a gambler, like you have this gambling mindset, then you can do all that. But personally, I don't recommend that. 1%, 2% of your equity per position. Then equity sizing. Equity sizing is the overall trades, overall open positions you have on your account. Let's say for example, you are trading Euro USD, you are trading NZD card, you also have a position of on AUD Swiss francs. Now each of these positions you have, each of these trades, you have 0.01, maybe 0.02 on this other one, then the next one 0.05. Now equity sizing is that the total of those your open trades should not exceed 10%. If you want to preserve your capital per time, make sure your open trades is not more than 10%. Like, why I'm saying this is that, let's say for example you took 6 trades and all 6 trades goes against you. What happens? If you didn't calculate your risks, you didn't use the proper equity sizing, you may blow up your account. But if you calculate and say, okay, fine, I don't want to risk more than 10% of my equity per time. Like, even if you are trading multiple assets, but you make sure that your overall equity exposure is between 7% to 10%. You don't exceed that. So what I normally do is that, for example, I take trade on a GBP USD. I take a trade on GBP USD, and I also open another position on AUD card. Now, if AUD card moves in my favor, let's say these two positions I'm risking to 2%. That is a total of 4%. So if AUD card moves in my favor, I set BE. I'm only left with 2, and that means my equity exposure now, my equity risk now is 2%. So I have 8% or 6% left for me to take more positions. So per time, make sure you don't exceed 10%. Ideally, I would say between 5 to 7% if you are new to Forex. But if maybe you are a pro, don't exceed 10. So sometimes the market just tumble. We don't see it, you may not expect it tumbling, but it just tumble and goes against you, and everything, all your trades hit stop loss. It has happened to me, you know, and it still happens. Sometimes it still happens. Like for example, I take 3 trades, the whole 3 trades will hit my stop loss. Maybe the next one I will take will now move in my projected direction. So position sizing, 1%, 1 to 2% of your equity or your trading capital. Equity sizing ideally is 5 to 7% per time. So let's say you take 10 trades and they move in your favor, then you set BE. That means you are now having a risk-free trade. Then you can now take more trades, and you can add up more trades. Now another thing I want to talk about is what we call RR, risk to reward. Now there is a debate among traders which risk to reward is better. Some argue is 1:2, some argue is 1:3, some also argue is 1:4, 1:5, 1:6, 1:7. And I still see some traders celebrity traders on YouTube, they will tell you 1:26 is the best. You know, this is what I have to say before I break this down. You can't control the market. I can't control the market. You can't control the market. We don't have such volumes to push the market. So anything can happen. The market, truth be told, the market is not designed for you to make money. The market is designed for you to lose money. As far as you are a retail trader, the way the market is designed is for you to lose money. The market is not designed for you to make profit. So since the market is not designed for you to make profit, you don't need to stay longer too much. Like you don't need to stay too long on a trade, except maybe you are a position trader. Like you can just take a trade and leave it for like 3 months, 4 months, and go around doing other stuff. As far as you are a day trader or maybe a swing trader, you are trading full time. All your trades should be time bound. All your trades should be time bound. Like for example, let's say you want to sell Euro AUD, and you see this key resistance on a weekly time frame, and you take a sell position. Now the next low, maybe the previous swing low is like 1,000 pips. If you are a day trader, you shouldn't be targeting that 1,000 pips. It's too far. Find the risk to reward maybe 1:20 or 1:24, but that is too far. You can't achieve that within you can't even achieve that within a week if the market doesn't move so fast. So 1:2 is good, 1:3 is very good, 1:4 is better, 1:5 is excellent. Personally, I recommend 1:3. It's very easy. It's very easy to achieve 1:3. Like for example, you are risking 50 pips to make 150 pips. An average move in the market is always between 100 and 200 pips. So if you are a day trader and you risk 50 pips to make 100 pips, there's a possibility that price may move in your direction, then boom, hits your take profit and you move to the next trade. So risk to reward to use 1:2, 1:3. Except you want to swing trade, then you can do 1:5, 1:6. You know, you target long term, but short term trading, target 1:2, 1:3, jump off, then move to the next trade. So that is that for the best risk to reward to use. Okay, now let me also do a comparison here why risk to reward is very important in trading, or why I say 1:3 is the best for me. Now let's say you have 2 trading accounts and you fund the both with $100 each. You fund the both with $100 and you want to take trades on both of them. Let's say on the first account you want to be risking $20 per trade, and you want to risk $20 to make $40. That is 1:2. Okay, that's 1:2. So maximum you take like maybe 5 trades. Even a worst case scenario, 3 trades hits your stop loss, you have lost $60 and you'll be left with what? $40. Sorry, 40, yeah, that is $80. You'll be left with $80. So on an overall, you are on a loss. Now on account 2, let's say you want to be risking $20 to earn $60. That is 1:3. On a worst case scenario, let's say 3 trades hits your stop loss and you make profits. The remaining 2 trades hits your TP. You make $60 here, $60 here. That is $120. Your equity, your initial capital was 100. So you can see, you're risking 1:3. Now you have made more profits. Fine, you had losses, but overall, you made profits. At least you made $20 profit. While on the first scenario, 1:2, you made a loss. You lost $20. So that is why I'm saying 1:3 is the best for me. Anytime I take a trade, if my trade setup is not up to 1:3, I don't take that trade. Those of you in the trading challenge, you notice on my signals that any trade I take and is not up to 1:3, I don't take that trade. It must be 1:3, 1:4, sometimes 1:4, really 1:5, 1:6, but most times I do 1:3, 1:4. So if you are still there and you understand this plenty English I'm speaking, I want you to comment right now, I'm following. So if you understand everything I'm saying right now, just comment I'm following. Then we move. So nobody's following me. Okay, I see Gilbert is following. Who else is following? Who else is following me? Only Gilbert is following me. Wow, that's interesting. So that means I need to recap everything I said from beginning. Moses says I'm a newbie, I understand small. Okay, don't worry, you understand better. Okay, Ben is also following. Right, alright. Okay, so I'm going to proceed. We are far behind time, so I'm going to proceed. So before I move to the precautions, I'm going to share with you the precautions I actually use to make sure I don't over risk or I don't over leverage when I'm trading. But before I move, I want to let you know this. Anytime you take a trade and the trade moves in your favor, please set BE and take partial. What I mean by BE is break even. set break even and take partials. So let's say you took a trade on USD JPY and your position you use 0.05, and this trade moves like maybe 70 pips or 50 pips in your favor. What you should do when you see that is you need to close half of your loss size. That is the partials I'm talking about, like taking partials. You can close maybe 0.02, you know, close 0.02, then you move your stop loss to maybe entry or a little bit above entry. So in case price maybe comes back to retest your entry again before moving in your favor, it may take you out on break even and you still make profit. First you make profit from the partials you took and you still make another profit. So never be tired of taking partials and setting BA as far as you are trading. So this is a way I used to make sure that I don't have much losses. So once the trade just moves in my favor, boom, B has been set. Moves a little bit in my favor and I see a reasonable profit, I take partial and I let it run. With that, you'll be relaxed. You will not be caught like trying to make sure like the trade is going to go against you or something. So always take partials and set B. So let's look at some things I consider when I talk about risk management in trading. First of all, you need to understand or know your risk tolerance. We are all different, we have different personalities. So my risk tolerance is different from yours. For example, I can easily accept a loss of $200 on my account. But the question is, can you also accept the loss of $200 on your account? If you can't, if your answer is no, that proves the point that we all are different and our risk tolerance too are different. So first you need to understand your risk tolerance. Like for me, I just told you my total equity sizing is always 10%. If you know within you that you can't accept a loss of 10%, an overall loss of 10% per time, then you should bring down your total equity size from maybe 10% to maybe 5%. But if you are a risk taker, you are not conservative like me, you are not conservative like me, you can increase your equity sizing or maybe your position sizing. So first you need to understand yourself. You need to understand yourself, know your risk tolerance, know what you can have, how should I put it, know what you can afford to lose per time. So when you know that figure that you can afford to lose per time, you can now use that to determine your position sizing and your total equity sizing. That is one thing. So make sure you have a pen and paper over there and you are writing this down. Alright? Make sure you have a pen and paper and you are writing this down. So these are steps for you to learn and understand yourself, to know how to apply risk management in your trading. Then before you take a trade, make sure you know your exit levels. Don't just take a trade because you see price pumping up and you rush and take a trade. Like was it last week? Yeah, last week we bought Matic. This is crypto now. We bought Matic, and Matic pushed from about 40 cents to almost $2. And one of our members in our community that bought also made profit, and he came to me and said, boss, should I buy more at this price? I was like, why buy more? You should have bought more when it was at the bottom. Okay, so it's not advisable to buy more when it's at the top. So I said wait for maybe a pullback and a correction. That was was it 2 weeks ago? Be last week. Then this week, early this week, we saw Matic drop almost to 30 cents again. That was a discounted price for him to buy again. I don't know if he bought actually. So don't be taking trades. What I'm trying to say, don't be taking trades blindly. Make sure you have a plan. Make sure you have, for every trade, make sure you have a plan. Like for example, you should have a plan A, plan B, plan C. on every trade. You said, okay, if price do this, this is what I'm going to do. If price do this, this is what I'm going to do. So you need to know your exit levels before you take a trade. When I say exit, I'm not just talking about your stop loss. I'm also talking about take profit. Take profit is also an exit level. So before you take a trade, no, okay, if price reaches this zone, I'm out of this trade. If price on a loss, if price reaches this other zone, I'm out of this trade. On a profit, I'll be in a profit. Alright, so know your exit levels before you take a trade. Because when you don't know your exit level before you take a trade, you take a trade, and when the trade goes against you, how should I put it, pity, you start having feelings. Your feelings will start coming up. You start having pity for your money. You don't want to close that particular trade because it's on a loss. You start feeling, oh, it's going to go back, it's going to go back. Before you know it, it's going to dip down, like as if it's drilling crude oil, and boom, your account will empty. So make sure you know your exit levels before you take a trade. Then this one is very important. Avoid aggressive trading. So many young and new traders are caught with this aggressive trading. Like, it's like a revenge kind of trading. Let's say you take a trade right now, you wake up and you take a trade, and the trade hits your stop loss, you lose like maybe $50 or maybe $15. Now there's this thing, there's this urge inside you that will say, take a trade. Okay, let's say you took a buy and it hits your stop loss and you lose $15. Let's say you had $100 in your account. How much is left now? About $85 in your account. And something inside you will say, okay, he's selling. Take a sell position since the buy is not working, and you take a sell position. Now this is a revenge kind of trading. You want to make back the money you have lost. If you are caught doing this, I assure you, you won't last long in the market. So what you should be doing is that when maybe price hits your stop loss and you lose money, first thing you need to do is leave your screen. Maybe leave your screen, just try and clear off. Don't think about that money you just lost. Just leave your screen. Then when you come back, you try and review that trade and try and figure out what you did wrong. You know, try and figure out what you did wrong. Now when you know what you did wrong on the trade, and you know you were maybe at fault, because in fact in this market nobody is right. Nobody is right in this market. I can say it anyway. Nobody is right. If you like tell me that you have 30 years experience, nobody is right. The only person that is right in the market is price. Price is right, but you as a trader, you are not right. Price can do anything. So if you took a sell and it went and price went up, that means you were wrong, and you did something wrong along the line. Maybe you didn't pay attention to price action, or maybe you overlooked your fundamentals or something. So if you know you were wrong on a trade, just accept the losses and move on, because losses is part of this game. You will lose money in this trading. I don't want to pet you. I don't want to sugarcoat anything. See this trading, you will lose money. You will lose money. So you need to understand that losses is part of this game, because if you don't get that into your head, anytime you lose small money, like someone came to my inbox and said, boss, I've been losing money in trading. And I asked him, how much have you lost so far since you started trading? He told me $70. I didn't know it as a way to start laughing. I was like, us that we have lost like 10,000, 20,000. We are not saying anything. So it's better you know now, losses is part of this game. As much as you are coming into this market to make money, to make profit, also know that you can lose that your money. If you don't take time, you lose it. So losses is part of this game. So when you are wrong on a trade, accept the losses, move on. Accept the losses, move on. So also, you need to be very realistic with your trading goals and your trading plan and your expectations in trading. Now, I know you have watched a lot of videos that actually told you, with this strategy I flip $100 to $10,000 within 2 days. Yes, it's very, very simple. Now, the few of those, you have seen few of those videos, but the truth is, before that happened, they have had series of losses. They might have tried that particular tricks or tactics for like 20 times and lost money before that particular one went well, and they decide to publish it. Now, I have a similar video on that, but if you should go watch my own, you will notice that it's very very different, because I kind of did a range trading, like trading from one zone to one zone, to one zone, and at the end of the day I made almost 3K on that particular setup. It was a ranging market on Eurocard like 2 years ago. Okay, so make sure you are coming to the market with the right expectations, with the right goal, with the right mindset. You need to be very realistic with everything you do. So don't have the mindset that I'm going to fund my account with $100 and I will become a millionaire in the next 3 months. It won't happen. See, I'm telling you, it won't happen. So if you are having that kind of mindset, better stop now. And if you are in any financial difficulty, like for example, you have house rent issue, school fees issue, and you want to trade, you will lose that money. I'm telling you now, I want to be honest, you will lose the money, because you are not in the right state of mind for you to trade. So if your landlord is always knocking at your door every morning, Mr. whose name should I use? Okay, Mr. Ben. Mr. Ben, you never pay me rent, you never pay me, and you feel that you just jump into the market, use $50 and make $200 and pay your rent. It won't work. You lose that your $50. So make sure you come to the market with the right mindset, and you need to be realistic. You need to think long term, not the short term. Okay, you need to think long term. Like you come into the market, let's say you start with 100. You can say, okay, what you should be saying is that, how can I be making 5% of this my $100 monthly? You may say 5% is small, but this is the truth. Do you know, if you can trade your $100 account and you are consistently making 5% every month, and you have been recording your trades, and you have a trial record of let's say 12 months, 2 months, if you carry that record and meet one big boy in your environment and say, oh God, this is what I've been doing, and he sees the track record and sees the consistency, do you know that big boy can give you like maybe 5K or 1K and say, oh yeah, do this thing, let's see how it goes. It's very see, this is what we some traders we fail to understand. It is better for you to make 2%. It is better for you to make 2% of $100,000 than for you to try and make 50% or 100% of $100. I hope you know what is 2% of $100,000. You can't compare it with 100% of $100. So try and master your skills. Come with the right mindset here. So when you start with $100 as a newbie, you want to learn the ropes. So you can set a goal that, okay, you want to be making 5%. Okay, 5% of $100 is $5. You are learning, so you make $5 this month. You don't, even if you don't withdraw the money, let it be there. The next following month you make another $5. Just try to be consistent. So that is how you can gain mastery. But I'm not trying to say that you can't make 50% of your account within a month. I'm not saying you can't even make 100%. It's very, very possible, but it's high risk. It's not realistic at all. Because let's say if you have a goal of 70% of your $100 every month, any month that you make less than $50 or less than 50% or maybe less than 30%, the following month you are going to put yourself under pressure to hit your targets. And when you put yourself under pressure to hit your targets, you won't be taking the right trading decisions. That is one. You won't take time to do your analysis again, and you may not even be calculating your position size again, or equity size again. You just be taking interest randomly just because you want to hit your target. So please, I'm going to say this again, be very realistic when you are coming into trade. Coming in with the right mindset. Okay, if you want to stay long in this game, if you want to make money, come in with the right mindset. Be realistic. Don't take trades and say you want to risk 15 pips and make 1,000 pips. It's possible, but if you keep trying that, you may end up losing your money. So you need to be very realistic when you are trading. Then another thing I want to share with you about risk management is what I apply. I actually learned this from one of my trading bosses. I've forgotten his real name now, but they call him the Forex Grandmaster. But I've forgotten his real name. He's a Yoruba guy. They call him the Forex Grandmaster. It's the 80-40 equity preservation rule. This have worked for me since I started using this rule since 2016, 2017, since 2019, and it has been working for me. Like for example, let's say you want to start trading with $1,000. Okay, it's not advisable for you to start trading with the whole $1,000. Now you fund your trading account with $1,000, your broker with $1,000, but don't move the whole $1,000 to your trading account. You know, we always have the wallet like the back office now. So you move $600, which is the 60% of the 1,000, to your trading account, while you have $400 on your reserve account. You are keeping this $400 in times of drawdown, because there are sometimes you take a trade, it goes against you, but you are very, very certain that this thing is going to reverse, but the drawdowns get so heavy, so you need extra funds to like maybe back it up. So that is when you now add the 400 to the 600 and hold the trade till everything gets to normal and stabilizes. Then you take the 400 back. Sometimes why you need to do that is that, let's say you are new to trading, all right, and you are done practicing on demo, you want to try live account, you fund with 1,000. So when you move $600 to trading account, 400 here, if you lose that $600, you have something to fall back to. You have something to start all over again with. So that is why I love the 60-40 preservation, equity preservation rule. It's very good. So even if you want to start off with $100, you can still apply that. Just fund maybe your account with just $60 and allow the $40 on the back office. So in case you lose the $60, you can say, okay, you take a break for like 2 weeks, or 2 weeks is small. You can take a break for like maybe a month, then go back and study. So after studying and you feel you are okay again, then you will now have something to start with again. You have something to start with again. So write it down, the 60-40 equity preservation rule. That is how it works. So I learned that. So the last thing I want to discuss here before I attend to your question is the circuit breaker concept. And this is how the circuit breaker concept works. It's just like you giving yourself a break from trading when you make a loss. With this, it's going to help you control your emotions and put you in the right state of mind. So let's say you're a day trader. You can put it down in a rule and say, okay, if I lose 10% of my equity of my trading account, I'm going to stop trading for 2 days. Alright? Or you can say, if I'm going to lose 50%, if I lose 50% of my equity, I'm going to stop trading for like 2 weeks. If I lose 70% of my trading capital, I'm going to stop trading for like 3 months. So this actually helps me a lot. When I have maybe a streak of losses, like maybe I take 5 trades and all 5 trades hit stop loss that day, I'm not going to trade over the next 2 days. That is me. Because if I should want to force myself and continue trading that day, I may continue losing. So I need to just leave the chart and go clear my head. If possible, I can drink some water or some alcoholic stuff, you know, just clear my head, or sleep, you know, just go catch some fun. Because if you continue trading with that mindset, I bet you end up losing everything. Your next 10 trades is going to be on losses. So you can have this this rule down. Just write it down on your own. You said, okay, if I lose 10%, I take a break for 2 days. If I lose 30%, I take a break for maybe 2 weeks or maybe 1 week. If I lose 50% of my accounts, I take a break for 1 month or 2 months. With all these things I've said so far, if you start implementing it from today, if you don't see changes in your trading results, in your winning rates, next time I do a live video, tell me what you are saying wasn't right, or what you always say is not true. Okay? In fact, if you try this and it's not working and you lose money, call me and I'll refer your money for you. So that is all I have to say about risk management. So right now I'm going to entertain your questions. If you have any trading related questions, as far as it's trading, whether it's crypto, Forex, as far as it is trading, just all you need to do is just comment, write down your questions on the comment segments. Then I'm going to read them and answer them one after the other. So this is me waiting for your questions. No questions for me? Should we call it a day? It's already 8:46. I said this session won't be more than 30 minutes. Actually, I started on time. You guys kept me waiting. So I want to believe that everybody understood what I've been blabbing since 8 p.m. till now. Yes, understood me. And you are going to implement them. You are going to implement them. Also, not just implement them. You need to be disciplined in trading. Trading might be very easy when you watch the trading videos, but when you start live trading, is something else. Emotions jump in, and if you don't take time, the emotions will control you and you end up losing all your money. Okay, it seems we don't have any questions here, so I am going to call it a day. Then I'll let you guys go and rest. Who is this? T Mayaki. I did not see the trace you took today on my MT4. What could be the issue? Oh, I guess you're talking about the copy trading stuff. Don't worry. You send me a message on WhatsApp for that. Then we are going to trash that out. We are going to trash that out. Maybe you made a mistake with your settings. So just, it's better I see what happened from your back office, then I will be able to help out. So just send me a message on WhatsApp after now. If I don't respond immediately, just give me time. Maybe on or before tomorrow morning, I'm going to respond to you. I'm going to reply you. Any other question? Any other challenge we are having? Okay, I think we don't have any question here, so I'll call it a day. We end this. Yes, we will implement them. Okay, please kindly implement them. Kindly implement everything I've said. I'm going to publish this video immediately after now, so if you missed anything, you can rewatch this video over and over again. I'm not going to take it down. So you can rewatch the video over and over again, and so that you get better understanding. Then even if it's after now, then you find difficulties in any aspects or any area we discuss on this video, you can just drop a comment here, then we trash it together. Okay, so good night guys, bye.